Welcome everyone to week 33 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week trading options using $125,000 cash trading in margin account. And if you are brand new, the link is down below for the full playlist, all that kind of good stuff. So let's get right into it. So week 33 showed that I made $675. So again, I did fall short on it by $354. But the main thing is, what I'm noticing as I go through this challenge week over week is the time that I'm spending. To make $675 trading a 250K margin account is, in my view, absolutely mind-boggling. And to get $125,000 in cash is not that difficult. Savings, side hustles, all these different things. But you can just see how much money I've made. I've nearly made $30,000 in 33 weeks. And again, I am behind target, but again, this was a challenge that I wanted to push myself on. And you can see here, I spend less than a day making 29 grand. This is just crazy. So the power of options, and especially if you've got a larger account, you can get some exceptional returns. And what we're going to do, we're going to look at how I made the $675. Then we'll look at the charts of the trades that I have open and what we think is going to happen over the coming weeks. So if we head over to the trades tab, I'm taking a couple of screenshots now of the trades that I made. I only traded Coinbase and Tesla, and I did my first ever put credit spread on Tesla, and we'll go on to that inside a second. But yeah, very straightforward, very simple, and let's get right into it. So Tesla's currently trading now, and again, I'm shooting this in week 34, so we're trading at 182.75. So we've had all the SVB bank stuff, massive down days, and now we've started to recover off the back of it. So we've got the inverted strangle. Again, I'm not going to go into in this video. You can check out previous videos where I go into this in depth, but this is one of my problem charts, losing position that I'm rolling every single month. What we did do though in week 33 is that we rolled down our calls. So the 250, 220, we bought those back and then we sold them for the 240, 215 respectively. So if we have a look at this overall trade for the roll, we made $113 for placing that trade. And then lastly on Tesla, I played around with the 0 DTE option. Can't remember when it was actually when I did it. It was at 5:36. So to put things in perspective, the market closes at 9 p.m. UK time. So it was around a 3.5 hour trade of where we sold the 170 put for 10 contracts and then bought the 167.50 for $50, which netted us $50 for the trade. So what was that? That was $2.5 grand of risk to make $50. Now, it probably wasn't the right play to do, but I've been playing around with a few strategies in 0 DTE. So if you are not subscribed to the channel and you're interested in 0 DTE options, make sure you hit that bell notification, because there's a few challenges I'm doing behind the scenes on that. If you want to check those ones out, let me know. So this was a risky trade that I did for $2.5 grand to make $50, but I felt like doing it. So if we have a look at the whole of week 33, we can see here that I made $163 trading Tesla. So for the first week in a long time, Tesla is not my biggest earner for the week. That's primarily down to this short strangle not being in a very good position. It is coming in, which we'll look at in the charts. And let's look at that now very quickly. So we can see here that we have got the 125 call, which we rolled. We rolled it when Tesla was in this kind of area. And since then, Tesla started to come down. So the value of this, a short call, is decreasing, which is good. But the downside with having this put is the value of the put is going up, which is not ideal. I'd rather have that scenario. So what my plan is, hopefully Tesla can stay within this kind of range over the next, 15, 20 days or so. And then what we can do, we can try to roll this one up again nicely, and then using that credit to offset the debit that I'm going to have to pay on this particular put option, depending on what happens to Tesla. So again, we've got our 300 shares sitting there. And again, this is where we roll down. I think it was the 220, 250 to the 240, 215 respectively there, which is all well and good. So that is what Tesla looks like over here. Everything seems to be going in some of the right direction with Tesla. So I'm not too disappointed with that. Meta, there is no change, no additional trades that we've done. The bad thing about Meta, what I can see at the moment is Meta's now gapped up. It's up 6.85% on the day. Meta started to come down here. And again, look how it's using its March pivot point here to the T to bounce off. We still have this February pivot, which is not yet been tested, but the market is all over the place at the moment, and this isn't good for this 110 call that I've got. This put is going to start decaying away in value, which is fine. But again, I just have to manage this. I need to put this up to 120 and then play around with the put to offset the debit paid here. But again, I just need to get it to 140 so that I can just dump the shares, get the money back, and then start again for where I need to. So we don't need the price to drop all the way down to 110. I just need to get it to 140. So if I do 115, 120, 115, 120, 125, 130, 135, 140. That's 1, 2, 3, 4, 5, 6 months potentially I could be in this trade, and hopefully we get to fill in this gap. So the quicker it gets here, the more I can roll this 110 call up, which is what I need to do. So we should see what happens there from that perspective. AMC, I've not touched it. I don't even know what's going on with AMC at the moment, if I'm really honest with you. So we have a look here on what we have. Again, yeah, look, we're just staying here. I've got the $2 put. These are all going to expire worthless. They actually expire in 3 days' time in week 34. So I'm just going to let them go and just collect money on those ones there. So nice little trade for $650. Coinbase is the last one. The other stock that I placed a trade on, I sold 8 contracts at the 30 put. So I did it across 2 days. So I did 4 contracts on the Thursday for $49. And then I did Coinbase drop to the next day on the Friday. So I did 4 more contracts at $79. I'm enjoying trading Coinbase because it's really that is the only stock that really had some volatility in week 33. In week 34, I have placed some new trades, which obviously I'll go into next week just due to the SV Bank situation. So you can see here that we've got the 100, 110 call was just sitting there. I think I could potentially roll these down at some point in week 35, I would imagine. But I picked up 8 contracts of the 30 put. It's again below. I think it would have to be an all-time low, wouldn't it, for Coinbase to make for it to even get there. So I'm fairly comfortable with that. And again, Coinbase is up 6% today. I know it went down slightly last week, but we're pretty much where we are. So that one's depreciating quite nicely. And then lastly, we have Google. Again, I've not really been following this one, to be honest. I think it's GOG. We have a look there. We've got the 85 put again near recent all-time lows of 83.46. So I think we're in a good position here. We've got this situation coming on, might get a breakout. But again, I can put a call against this if I need to generate more premium and offset my delta. So overall, fairly comfortable with these trades. I think we are in a good position. If we look again overall on where we are at the market, $675. Again, I've got some new trades that I've placed on this week, which probably got me to about at least halfway through that target. And then the rest hopefully will come for some adjustments. So the way I like to do this now going forward, so you guys understand what my thought process is, because I'm not trading weeklies anymore, I'm trading the monthly option cycle. My aim, because I've still got capital 36% used, is I'm looking to place 1 to 3 new trades a week. They could be on the same underlying, but brand new trade. And then whatever premium I've collected on that, I will try to make as much premium as I can, adjusting current position. So for example, I go back to the Coinbase example, is I can adjust these strikes down to here, for example, and pick up another $100, $200. And Tesla would have been the perfect example for last week. where I closed out the 250, 220 and then reopened them at the 215, 240, netting me $113 in the same expiration cycle that I sold them originally. So that's what's called, or what people like to call in the industry, double dipping on the same expiration. So you could argue it's like free money to a certain extent. Once the trade goes in your direction, instead of closing the trade, you roll it in the same expiration cycle to generate more premium and more income. So I really hope that makes sense. Again, comment down below. If you've got any questions, feel free to reach out. There's a few videos on the screen now, which I strongly encourage you to watch if you want to understand more about the actual trading approach and the strategy I use to trade options. And I shall see you guys in the next video.